There is a powerful tax saving window during retirement that a lot of people may not even know about or even how to utilize it. Tax gain harvesting. And when you combine it with a new senior bonus deduction, it can open that powerful tax saving window during retirement. My name is Keith Wilson, a financial advisor, and in this video, I will show you a strategy that could help you legally pay zero federal tax on your investment gains. So let's get to it. So first, let me show you why this works. You see, when most people think about taxes in retirement, they think about avoiding capital gains. But sometimes you actually want to realize them on purpose. Here's the idea. If you've retired and have 3 to 5 years of living expenses set aside in cash or conservative investments, those years often come with much lower taxable income. Maybe you haven't started Social Security yet. You're not taking required minimum distributions, and you're living off of your savings. That creates what I call your tax opportunity window. So during this time, you can sell appreciated investments from your taxable brokerage account, realize those gains, and in many cases, could pay zero federal tax on them. Now, it's important to note this strategy does not work for retirement accounts like IRAs and 401ks, just taxable brokerage accounts. So how does tax gain harvesting work? Well, let's say you have $200,000 in a taxable brokerage account invested in a variety of stocks. Your cost basis is $120,000. Now, cost basis simply means what you originally paid for those stocks. So in this example, you've got about $80,000 in unrealized gains. Now, normally, if you sold it, that would trigger capital gains tax. But if your income is low enough in retirement, you can sell, realize the gains, and owe nothing. For example, in 2025, the 0% long-term capital gains tax bracket goes up to $96,700 for married couples filing jointly and $48,350 for single filers. So if you're living off cash, not drawing income, you can sell investments, stay within that bracket, and lock in those gains tax-free. But you might say, hey, Keith, I like those investments. I don't want to sell them. Well, then you just simply buy back the same stocks, the same investments, and reset your cost basis higher. So future gains and future taxes could be smaller. That's tax gain harvesting. Now, if you're 65 or older, things get even better. Under the One Big Beautiful Bill, retirees now qualify for a senior bonus deduction, an extra $6,000 per person or $12,000 per married couple. And that's on top of the regular standard deduction and the age-based add-on. Here's what that looks like. In 2025, for a married couple, both age 65 or older, standard deduction is $31,500. The age 65 plus add-on is a $3,200, and the senior bonus deduction is $12,000 for a total of $46,700 in deductions. Now, here's where it gets powerful. Remember, your taxable income must stay at or below $96,700 to keep all your long-term capital gains in the 0% bracket. Now, add that $96,700 to your $46,700 of deductions, and you get $143,400. That means a married couple age 65 or older could show around $143,000 of total income on paper and still pay zero federal tax on their long-term capital gains. Now, the senior bonus deduction does start to phase out at incomes of $150,000 or over, and it's only around until 2028. But that's an incredible opportunity if you plan it right. So here's an example of a couple both age 65, recently retired, not taking Social Security yet, and living off of cash reserves. Let's say their taxable income for the year is only $25,000. Because they qualify for the standard deduction, the age-based add-on, and the new senior bonus deduction, they can offset about $46,700 of income right off the top. And that means they could sell roughly $70,000 in long-term capital gains, stay under the $96,700 taxable income ceiling, and pay zero federal tax. Then they simply buy back those investments, reset their cost bases higher, saving potentially thousands in future taxes when they do eventually sell. That's what proactive tax planning looks like. Even if you don't do gain harvesting, this is also a great time to just rebalance your portfolio, because over time, some investments may grow faster than others. So if you never trim them, you could end up with a few highly appreciated positions that create tax headaches later. So by periodically harvesting gains and rebalancing while your income is low, you could possibly prevent that problem and keep your taxes and risk in check. So if you're retired or about to retire, consider using tax gain harvesting during low-income years to lock in gains at 0%. Leverage the senior bonus deduction to expand your 0% bracket even further and rebalance strategically so your portfolio stays efficient and tax smart over time. Hey, this isn't about beating the market. It's about beating unnecessary taxes. Now, of course, before implementing any strategy, consult with your own tax advisor because, look, everyone's situation is going to be different. Hey, hope you found this helpful. If so, hit that like button and subscribe. I post weekly videos to help you make smarter retirement decisions that actually fit your life. And if you'd like to see how much gain you could harvest tax-free and how this new deduction could work in your plan, there's a link below to schedule a call. Hey, thanks for watching. We'll see you next time. If you like what you're seeing so far, check out this next video. Subscribe to the channel. Lord willing, we'll see you next time.